This is an Uncovered Japan company research report on Qol Holdings, ticker 3034. Qol is a Japanese healthcare group that connects dispensing pharmacies, generic drug manufacturing, and medical outsourcing. This video explains the business, the evidence behind its current valuation, and the risks investors should watch. At the July 2026 source date, QOL traded on a forward PE of 9.3 times, with a 12.9% FY 2026 ROE and a 2.79% dividend yield. Those figures compare well with healthcare peers. But the equity ratio is 36.3%, and the quality of that equity matters because the group has grown through acquisitions. Qol began as a dispensing pharmacy chain. In Japan, patients take prescriptions to separately licensed pharmacies, so the chain is a regulated, service-led retail healthcare business. Qol has expanded well beyond that base. It now owns a generic drug operation and a medical BPO arm. The resulting research-to-patient structure is unusual among listed Japanese peers. The segment mix explains the investment debate. Pharmacy is 61% of sales and provides the stable base, but its operating margin is only 5.5%. Pharmaceuticals contribute 34% of sales and grew quickly as authorized generics launched. Medical BPO is smaller, at 5% of sales, yet it carries the highest operating margin, at 13.3%. Management describes this model as revenue circulation. Pharmacy cash flow can be reinvested into pharmaceuticals and BPO, which then expand group cash flow. That structure is difficult to replicate. Still, the report is careful not to overstate it. The cross-segment revenue contribution remains limited, so the vertical integration is a strategic asset whose monetization is still a work in progress. Over 6 years, revenue rose from 161.8 billion yen to 290.8 billion yen, while operating profit roughly doubled to 14.8 billion yen. The clear discontinuity is FY 2025, when Qol consolidated Daiichi Sankyo Espha. The underlying business has also improved, but investors should separate the acquisition step change from ongoing organic execution. Cash flow is an important counterweight to the acquisition story. FY 2026 operating cash flow reached a record 18.7 billion yen, and free cash flow turned positive at 9.6 billion yen after the previous year's acquisition outflow. The dispensing pharmacy base settles reliably through social insurance, giving the business a recurring cash flow foundation. The balance sheet is the central caution. Goodwill plus drug marketing rights total 67.4 billion yen, exceeding shareholders' equity of 59.8 billion yen. The FY 2026 ROE recovered to 12.9%, but the equity ratio has fallen to 36.3%. Future earnings must support these acquisition intangibles to avoid impairment risk. Pharmaceuticals are Qol's growth engine, led by authorized generics. Yet this segment is also highly concentrated. Roughly 98% of FY 2026 pharmaceutical sales went to Daiichi Sankyo, which is the channel for these products. That relationship provides scale and access, but it concentrates a large share of the growth case in one customer connection. Against its healthcare peer set, Qol combines a 9.3 times forward PE with a reported 12.9% ROE. The report puts the peer median PE at 13.1 times and the peer median ROE at 8.7%. The discount is visible, but it exists alongside the customer concentration and goodwill questions rather than in isolation from them. Qol's Vision 2030 targets 500 billion yen of revenue and 35 billion yen of operating profit by FY 2031. The important qualification is that roughly 35% of the revenue target depends on acquisitions that have not yet been identified. It is a directional ambition, not an executed base case, and further M&A could add both opportunity and integration risk. Qol is a differentiated Japanese healthcare group. Stable pharmacy cash flow sits alongside faster-growing generics and a high-margin services arm. Its valuation and reported returns are notable, but so are the dependence on Daiichi Sankyo, the intangible heavy balance sheet, and policy pressure on pharmacy margins. This is research, not investment advice. Use the full free deep dive for the detailed evidence and sources. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.